This is part two of the course, our first, and we had learned about what were the provisions prior to the changes and what changes have happened, especially in the code on wages. We had seen the Social Security Code provisions relating to matters in Social Security prior to the code. So today we will do a session on SS code, that is the Social Security Code, and also the OSH code, and then see what is the kind of takeaways from there. We may also like to take up the some of the other labor laws relating to S&E Act, PT, Apprentices Act, which are all labor related and therefore, but they are standalone. So they do not come within the purview of the labor codes, but they are standalone laws which also need to be factored in terms of social security matters for organizations. Yesterday, we had seen that probably in terms of coverage of legislation on labor, the not-for-profits are clearly within the purview of the legislation, a lot of them except a few. And I had said that unless there is an exception or an exemption from particular applicability, it should be deemed that not-for-profits are also covered. So this is something that I just want to clarify. This is how the layout is of the session. Today's session is the layout is like this. We will do the code on social security. We will do the OSHWC code. What are the key takeaways, or what is it that we should be kind of thinking of doing at this point of time? The last one is other standalone laws which also coexist on matters relating to labor. Now, this is the code on social security, and we had seen yesterday these particular laws have been subsumed, and quite a few laws that are applicable for not for profits. So, it's the Employee Provident Fund Act, the Maternity Benefit Act, the Gratuity Act. So, these three were very clearly applicable to not for profit organizations. As far as the Employee State Insurance Act is concerned, we know now that the Employee State Insurance Act is also applicable to not for profits. As far as the Employee Compensation Act is concerned, okay, so the Employee Compensation chapter does specify the types of employment to which this chapter would apply. As far as labor or employees in the ASI Act are covered are concerned, they will certainly, for purposes of compensation, be covered under the ASI Act, as I had mentioned yesterday. But as far as ECA is concerned, or ECA related chapter is concerned, there is some ambiguity because the second schedule to the SS code has specified what all employments would be covered, which does not actually cover charitable institutions. So, in my understanding, there's some grayness about compensation eligibility for employees who are not covered under the ASI Act. We will see that. So this is how the chapter layout is for the codes. Okay. And so the chapter 2, social security organizations, these essentially mean organizations like the EPFO and the ESIC and other building construction boards and other boards. But for our purposes, it's basically the EPFO and the ESIC corporation. Then you have chapter number 3, which is on EPF, chapter number 4, which is on ESIC, chapter 5 on gratuity, and chapter 6 on maternity benefit, chapter 7 on employee compensation. Those are the ones that I have highlighted are the are some of the chapters relating to not for profits which should be for interest to us. Then the construction workers social security, the unorganized workers, gig and platform workers, which is a new category of workers that are already in existence but have never been recognized under law, are also now covered. The other chapters are basically administrative and finance and offenses, which are more in terms of the procedural part. So what is the substantive part in the social security code right now is what we are going to see. Now, this I have. So yesterday I said an establishment is what is the main word that is being used in all these codes. The definition of establishment. So establishment clearly means a place where any occupation is carried on, and this certainly includes the not for profits. Now, when we are very clear that establishment covers not for profits, and the only two things that you have to remember is that they talk about establishment and they talk about industry. So we have already seen that, and therefore the difference between employee and worker also because animating because of the difference in the words establishment and industry. Now, establishment and industry, besides that, there are no other nomenclature to designate or to identify a particular place of work. So we are definitely covered under the definition of establishment as far as all these three codes are concerned uniformly. Now, in terms of the coverage of the various chapters for Social Security, we have to look at the first schedule of the SS code. Now, in the first schedule, there are what is being mentioned here in this slide is that the EPF Act is to any establishment in which 20 or more workers in any establishment, every establishment in which 20 or more employees are employed. ESIC, every establishment in which 10 or more workers. Gratuity, any establishment in which 10 or more employees. Word employee is coming more or less consistently. And this is in the past 12 months. As far as MBA Act is concerned, establishment with 10 and 12 or in the preceding 12 months. Okay. Employee compensation. Now it says as far as employee, this first schedule to the code is specifying what is it that gets applicable and not applicable. So we are clearly covered under ESI, EPF, gratuity, and maternity benefit. Now, we had seen yesterday what are the provisions relating to the uh, current position in these four laws prior to commencement of the code. However, the EPF Act still continues to be in force. As far as employee compensation is concerned, it says this applies to employers and employees to whom Chapter 4 does not apply. Now, Chapter 4 is ESI. So, for if you are covered under Chapter 4, then it is not applicable, and to employments which are mentioned in the second schedule. If you look at the second schedule, there is a huge list, but we are not directly covered. But if we were to say that it applies to employers and employees to whom Chapter 4 of ESI applies, then as far as employers are concerned, definitely it will get applied. Now, there is this grayness which I am noticing in terms of ECA, EC provisions when a particular employee is not covered under the ESI Act for purposes of employment injury and occupational diseases. Okay, so yesterday we had this discussion. Somebody who's crossed the ESI limit, will they be covered under EC chapter of the SS code? There is some amount of uncertainty. That is what I want to say. But as far as the other chapters are concerned, whether EPF, ESI, MB, and gratuity, there is no confusion now. Okay, so this has to be very, very clear. The first schedule you can go to, it clearly states this. Now, as far as the why I've brought the first schedule is primarily to tell you that we are certainly covered. Now, there is only this EC provision which where I have some uncertainty in terms of beyond the 21K wage limit for where the ESI coverage stops. What happens to people who are already beyond that coverage? So this is something that we'll have to look at, and therefore we have to park it for this time. Now, as far as key provisions in the SS code are concerned, the biggest change that has happened is that the calculation of EPF, ESI, gratuity, and earned leave. Earned leave is part of the OSH code, but they are all based on the definition of wages. It's not, none of it is now based on EPF was used to be based on basic plus DA plus retaining allowance, essentially basic. ESI was based on gross wages or gross salary, and gratuity was based on basic plus DA. Okay. So basically, we were used to EPF on basic, ESI on gross salary, and gratuity on basic. Now, the entire thing changes to this applicability or eligibility for EPF or the contributions for these particular laws have to be based on the definition of wages that we had seen yesterday. And wages is no longer basic. Okay. Now, the EPF coverage is universal. As we had seen yesterday, that EPF Act used to be applicable to only Schedule 1 establishments. We are covered under the Schedule 1. So no confusion was there about EPF applicability if we cross the threshold. However, the Schedule 1 has been abolished in the sense now EPF coverage is universal. No Schedule 1. Just as the in the Minimum Wages Act, the schedule employment has been done away with. In the Payment of Wages Act, the specified industries has been done away with. Similarly, in EPF Act, the Schedule 1 has been done away with. The EPF and ESI threshold for coverage meaning 10 or 20. So if you will see the previous schedule, EPF for 20, ESI, maternity benefit, and gratuity all are at 10. The same coverage, same threshold for coverage. And the wage ceilings in EPF, ESI have also not been changed. But I'm saying be on the lookout because we are hearing a lot of buzz in terms of may not be the in terms of coverability means in terms of 20 10 10. Okay, because those thresholds are already low. But in terms of the wage ceiling, which is 15K, 21K, is something that the government is looking at in terms of a potential increase. Therefore, when we are doing all our homework in terms of rebuilding, reworking, revisiting our structures, revisiting our social security contributions and benefits, please keep in mind the fact that one fine day you might have a increase in the wage ceiling, which will spoil the entire calculation. If for instance the calculation were to go from 15 to 25K or 21K or maybe 25K is what is being said uniformly for both ESI and EPF. I'm not saying this with conviction, but what I'm saying is that we should always keep this in mind in terms of seeing that this wage ceiling definitely might get revision because it's already very old. The ESI, if there is even one employee in a hazardous or life-threatening occupation, even if one employee is there, the ESI coverage has been expanded or extended. Okay. Now, EPF contribution. Now, just see EPF contribution as per the EPF chapter in the SS code is 10% for employer. So, the employer can restrict its contribution to 10% as against 12%. So, they have reduced the contribution percentage in case of EPF in the labor codes, which indirectly means that probably the wage ceiling is something which they will work with after they have reduced the contribution to 10%. So the 10% is for employer, and you cannot insist on more than 10% for the employer share. Now, since our wage composition is where the employer share is part of the gross salary and is paid in fact by out of the gross salary, which is basically from in a way interpreted in a way that it is the employee's compensation. Therefore it doesn't really matter. But where organizations where the employer share is outside of gross, and I tend to now not talk of this gross pay and things like that, we are talking of total remuneration. Okay, so the 10% for employer is something that the employer can restrict its contribution. As far as employee is concerned, they can do 10%, but they can also do higher than 10%. Okay, which is not mandatory for the employer. Okay, besides the voluntary contribution, that is what I'm saying. So you see, in terms of looking at a wage ceiling of 25,000, then if you were to look at 10%, 25,000 as the PF ceiling wage, the 10% if it is there will still work out to 10% of 2,500, which will actually it will become 2,500 as against the PF ceiling contribution of 1,800. Assuming that we are restricting the PF contribution to the PF's wage ceiling, which is perfectly possible in law. So even then, the PF contribution from 1,800 suddenly, even if we were to look at the wage ceiling as the basis for calculation of 10%, will actually go up from 1,800 to 2,500. So that is something that because government is looking at increasing the employment pool and showing to the outside world our employment has gone up x to y, and therefore the unorganized sector, the loosely newer sectors like platform gig workers, they are all being brought under social security and in the definition of the labor codes, just to have a better understanding of what is the employment status in this country from the government's point of view. So EPF contribution is 10% for employer and higher than 10%, as I have mentioned. It can be 10 or higher, plus the voluntary contribution being separate. Okay, that is dependent on the employee, and the employee share will vary in terms of the voluntary contribution. As far as EDLI contribution is concerned, which is 0.5% with a cap of 75 based on 15K as the ceiling. Now in this chapter they have said it can be up to 1% of wages. Okay, it can be up to 1% of wages. So basically there is a possibility of increase, plus one fourth of 1% as admin charges. This also goes up from 0.01% actually under the present situation. So my understanding is that the employer's contribution, which is only employer's contribution in case of EDLI, both in terms of contribution for EDLI as well as admin charges for EDLI, will go up as we see from the percentages that have been specified. As far as ESIC is concerned, it is applicable to every establishment. No questions about this. Okay, so there is no restriction that it is to factories or to shops or to establishments which are basically into medical establishments with charitable being medical and educational. That concept is completely gone, and the ESI coverage in terms of availability of benefits and facilities is to all districts and not to notified areas, which was until now the case. As far as the list of beneficiaries is concerned, the list of what are called as beneficiaries, the list of what are called as insured persons, IPs, in-laws, and dependents have also been included. So the coverage in terms of family for ESI is also going to go up. Now, as far as ESI chapter is concerned, the employment injury and occupational disease is something which is covered under the ESI Act. Now, what are occupational disease have also been defined, although employment injuries have not been so specifically, but occupational disease has been classified as far as ESI is concerned or occupational disease is concerned. Please remember, commute related accident or employment injury is considered employment related. So if you're going home and coming from office, going from office to home or home to office, that commute related employment accident will be considered as an employment injury. So that expanded coverage has been done as far as employment injury is concerned. This is a change. Okay, now the big change that has happened is the opt in opt out possibility for EPF and ESI. Until now, once your establishment was covered, you could not, even if the numbers fell below the threshold, you could not have gone, beyond, you could not have gone and got yourself deregistered. This is what is called as opt out. Okay, opt in means that if you were not within the threshold of 20 and 10, okay, then you could opt in voluntarily. Okay, although the voluntary basis, the rate or contribution which was for PF 10% has not been very specifically specified up till now. Whether it will be still 10% or anything different, I really don't know. But the opt in means that if you are not by law required to be registered, you can opt in. And similarly, you can opt out if, as an establishment, you are already covered. However, there are very strict conditions. The conditions are that there is a 5-year lock-in. Okay, so my understanding is that from the notification, the up to a period of 5 years, I think the opt-out is not possible. Then majority of the employees agree to opt out. Majority of employees agree to opt out. All filings and dues have been paid, and an application is made for EPF to the Central Provident Fund Commissioner, and in the case of ESI to the Director General ESIC. They will have a 60 days decision window in which they will consider your application for opt out. So I what we need to understand is that once covered always covered concept is something that has been done away with as far as EPF ESI is concerned. That is what I want to mention here. There is a possibility for opt out, but there are strict conditions that have been laid down. But there is always this option of opt out that is available. This is something which is absolutely new. As I had said, that the government is working on just one UAN as far as EPF and ESI are concerned. Please remember, EPF and ESI are now working together in a very concerted manner, in the sense that they are working together, and maybe the administration of under the SS code for these two chapters, okay, although they'll be different. I'm not saying the EPFO and ESIC, yeah, corporation will merge, no, but there will be a lot of synchronization in terms of the way they work. So as I said yesterday also, the UAN and the ESR, the ECR, the challan and report, okay, the electronic challan and report for EPF and ESI might become one. Okay, why? Because the definition of wage is now the same. It really doesn't matter. Earlier, EPF was based on basic plus DA plus retaining allowance, whereas ESI was based on gross wages. Now, since the definition of wage is uniform, therefore, even one ECR can work for both, for contribution under both the laws. And this is very serious work that is happening now. This ensures that as a composite return or report, you are complying with the threshold both for ESI and EPF in terms of a unified ECR. So the more the integration the department is doing, the more the ease of finding out that you are complying or not complying. That's what I want to say. Continuing with the changes, the other big change that I want to mention is that gratuity will not be allowed as a provision in books. Okay, you will have to get mandatory insurance of gratuity. Mandatory insurance of gratuity is now required. So you'll have to take a group gratuity scheme policy of any of those insurance service providers and get the gratuity funded, not just allow it to be a provision. That is now a compulsory provision where gratuity is applicable. There is a new category of worker, what is called as flexi hiring, new category of employee. It's not new. Okay, we have been used to a situation where employment contracts were given for fixed period, and we used to call our regular employees and contract employees or employees on contract, which were employees, not just contractors in the normal sense. They were employees. They were given an employment letter, but they had a fixed term. Now, the government, and please remember, a lot of these changes have also to do with the fact that these are some of the practices on labor in other developed countries. So, government is also taking cue from, the way labor is organized in other developed countries, and therefore they want to also go up that ladder. Now, the fixed term employment or fixed term employee, or FTE as it is called, I've taken the definition from the code. Engagement with a written contract of employment for a fixed period, provided. So this is an employment contract, but there is a fixed period. It's not an open contract just as regular or permanent, as we call them permanent. I mean, there's nothing like a word permanent. There's a word called regular. Okay, so uh, regular workers will generally not have an end date to their employment contract. That is what the understanding is. Now, has this been defined anywhere? I don't think there's any kind of definition. If you go to the SS code, there is those definitions are not there. That's how we have organized ourselves. But the FTA contract says that hours of work, wages, allowances, and other benefits will not be less than that of a permanent employee. Okay. will not be that of less than of a permanent employee. Why we call a employee permanent is because there is no permanent, there is no end date to his employment, and therefore he is permanent. Now, doing similar work, doing similar work. So if you have a permanent employee and a fixed term employee doing similar or same work in terms of their job description, the hours of work, wages, allowances, cannot be different, and they will all be eligible for all the benefits that are available to a permanent employee. So in essence, what it means is that in terms of all benefits, all remuneration, all benefits, the FTE will be equal pari passu to what is the case as far as a permanent employee is concerned. Okay, so this is something that I just want to mention. There is a possibility that people will use this FTE business too much. And please remember that when I'm talking to you about codes, we are not talking about NGOs. We are talking of all possible employment across the country, in industry, in service sector, wherever. So it's not just for us that these codes are there. That's the understanding you must have. So the second thing that I want to say is that the states are in the process of making rules. Some of the states are looking at maximum period for which a FTE can be given. Now, an FTE, if you were to ask me, can the FTE be for 3 months? Yes, an FTE can be 3 months. Can an FTE be for 3 years? Yes, it can be. There is no specific period for the engagement or engagement period for the FTE. All right. But the states are looking at a maximum period, because you then can have a period of 4 years or maybe less than or 5 years as fixed term employees or 7 years as fixed term employees. That's technically possible. But the states are considering putting a threshold in terms of the maximum period, and also putting a threshold in terms of the maximum number of FTEs in an establishment. So I'm not saying with certainty, but there is this word on both the period for engagement of an FTE as well as the number of FTEs in an establishment. The FTE which has done 1 year of continued service, in addition, will be eligible for gratuity. So when we're talking about benefits being the same is all right. But in a case of a permanent employee, the benefits of gratuity were available at 5 years or 4 years, 240 days, as we had seen. But since the FT would not have done, if not for a 5 year engagement, would not be eligible for gratuity. That benefit will not go. So the government has said that the gratuity eligibility is for fixed term employee with continuous service of more of 1 year. Okay. Now the point that has to be understood here is this is that for it for a, if the contract is for 1 year, then continuous the 240 days for 6 days working and 190 days for 5 days working. This has been written in the code. If it is 6 months to be considered, okay, but after 1 year, 6 months to be considered, then it is 190 divided by 295 and 120 days. Okay. Same provision that if it is more than 6 months, rounded off to the next year, and if it is less than 6 months, rounded off to the previous year. Now, what is important and something that has to be washed out is that if you are already carrying fixed term employees, okay, will the period of employment prior to 21/11/2025 be considered as the period for purposes of continuous service? Okay, so that is something that we need to have more clarity in terms of you know uh, whether this FTE employee contracting will include the engagement period under any existing FTE contract and will be counted for purposes of 1 year or not. The general view is that if you are carrying FTEs and their engagement prior to 21/11/2025 is exceeds 1 year, then the gratuity provision has to be made. Okay. So that means additional gratuity provision for FTEs also. That means, have you made provision for gratuity for such contract employees in your budgets? Is something that you'll have to see, because you'll have to make that make that funding of that gratuity for periods prior to 21/11/2025, if that clarity comes, because the retrospective applicability of provisions is something that people are looking at. The professional bodies are saying, well, the liability will come. Okay, so the point here is also for FTs that are continuing with you. Okay, that is something that I'm trying to refer to. Now, as far as, so here is the point. The so this is not for FTEs. I'm not talking now. We are not talking of FTEs. We are talking of retrospective applicability of gratuity prior for periods prior to 21/11/2025. Okay, based on the new definition of wages, because the new definition is not basic. The new definition is wages. Okay, and therefore the implication would be higher for already existing employees who might be running in your organization. Now, prior to 21/11/2025, our provisioning was based on basic. But if at the end of their employment period of 4 years to 40 days, when you will have to pay, it will have to be based on the definition of wages. Whereas up to 21, and somebody say, for instance, today or 8th of January were to complete 5 years and were to go, will the 8th, will it be that the on 8th of January 2026, when that person goes, the calculation of gratuity will be based on basic or wages? But how our provision up to 21/11/2025 is on the basis of basic. So there will be a big gap between basic, unless the basic, again, the basic is also very critical. If the basic is closer to 50%, then the impact or liability is going to be minimum. But if we have been keeping basic as 25%, 30%, then the difference between the provision made for gratuity or earned leave based on 25, 30% versus now the minimum 50%, that gap is going to be huge. So from individual organization to organization, based on how your structuring is and how close you have kept the basic to the 50% of basically the CTC or the total remuneration, is something which will save you from additional liability in every case. That is what the idea is. So that additional liability, we have no clarity, but the ICAI, the institute, has said, please recognize such increased liability as part of due to the new definition, both under gratuity and EL, as vested past service cost. And where the vesting has not happened, where the 5 years has not got completed, apportion it over the vesting period. This is what is being referred to, because the ES 15, which deals with benefits, does give this kind of an indication or this kind of a guidance, the accounting standard 15. So I have just put it here. Why I want to say what I want to what I want to say is, for regular employees, the gratuity retrospective liability and the EL retrospective liability, and for fixed term employees, the EL and gratuity additional liability, if the retrospective period of engagement for an FT is part of the 12 months, 11, 12 months. Of course, EL also will get impacted because EL is also now on wages, whereas most organizations, I'm not saying all, most organizations work on EL based on basic. Some of the organization work on EL based on gross also. There you are over covered. So what I'm actually trying to say is that, and wherever you have already covered them over the definition of wages, it's not possible to reduce that because that's a contractual arrangement. But wherever there is a deficiency in terms of gratuity EL for regular employees, gratuity EL for FTEs, their liability that has to be ascertained. Okay, so this is something which is very, very important. Now, so nobody is going to right now say whether retrospective or not unless the ministry clarifies whether an employee will be covered for these new provisions from 21 and up to 21. They will be covered under the existing so-called definitions that we had been used to prior, because the old laws have been repealed. How is the liability to be ascertained is the question. So I am only flagging this as an issue. I am not even giving an answer in terms of yes or no, but we have to be clearly mindful of this and look out what is it that is being clarified. As far as the Employment Notification Act that we had seen, now these are now replaced with what are called as career centers. And so the vacancy notification on career centers has to be provided, except where the employee strength is less than 20. If your employee strength is less than 20, and if the engagement is for less than 90 days, then in that case the employee vacancy notification may not be given. Now Aadhaar is the singular ID proof for registration and availing health benefits under the SS code. This is something that you please understand. So earlier there could have been various other ways of identification under different laws. Aadhaar is the singular ID proof. Transition, it is said that there will be a transition period for compliance with the new SS code. So that is why I've been saying, please just wait. Please be aware of all the changes that have happened, all the changes that are being made, but so start doing your homework. But before implementation, just look at one, the cutoff period, the transition period that will be allowed for transition to the new provisions. That is something that you please look for, rather than just jump into it, because there could be many more changes, and if you have already jumped into the conclusions and decisions and started implementing, probably you might have to redo the entire thing. Now, as far as if PPF inquiry is concerned, so there was an unlimited lockback, which means there was no period specified कब कितने साल पहले तक का EPF केस का इंक्वायरी शुरू हो सकती थी. Now that has been capped at 5 years, and the department has to complete the inquiry in 2 years. So the regulator is also getting regulated. If NGOs are getting regulated, the regulator is also saying we will also ensure that any inquiry does not have a previous limitation of more than 5 years. And we will also ensure that the decision on that matter, this is EPF, is taken in 2 years. So there is no unlimited lockback, okay? No unlimited lockback now. 10 years back, a matter is suddenly opened by the EPF department. No, there will be a 5 year lockback period, okay? Uh, so we have also seen in the code on wages also, the 3 years limitation period. So they are also, ensuring that we do not harass employers because for periods where data might not be available, information may not be available, or it may not be even relevant. A new category of beneficiaries is what is called as the platform workers and the gig workers. So basically, these gig workers are workers who are outside of traditional employer-employee relationship, because new avenues of employment have gone up. So whether, and especially the Amazons and the Swiggy and the Zomato, they are all gig workers. There is no employer-employee relationship, as is the case, but they are working based in terms of per delivery cost or whatever is that arrangement. And if there is a platform, so the gig workers are the is the designation, and if they are using an online platform, the same gig workers are called platform workers, like an Ola or an Uber, where the platform owner doesn't come into the picture. Actually, between the customer and the on the which goes on the platform, the platform worker is now interacting with you. Okay, that's the difference between a platform worker and a gig worker. Now, there, I'm not getting too much into details of this, but what I'm only trying to say is that the same kind of social security benefits that are provided in the organized sector is something that will be provided to the gig workers, platform workers, and unorganized workers. So, those aggregators like Amazon and Flipkarts, they had that they did not make any provision for social security for these people who are working from or associated from them with them. But these aggregators now will have to make a contribution to what is called as the SS fund, the Social Security Fund, which will be set up, and their disability, health, maternity related social security benefits will be, uh, 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 you know, kind of. The government is also working on social security for unorganized workers. Okay, so basically under social security, the organized, unorganized, and self-employed will all are all envisaged to be covered for social security. Now, just as we saw the National Wage Advisory Boards, similarly under the SS code, there will be the national and state social security boards. Okay, and they will decide on matters relating to social security. Now, I had already told you yesterday that once you have an LIN, the labor identification number, the existing EPF ESI registrations will be deemed as valid, and new registration will all be seeded under the LIN, but that LIN will be the same. Now I come to the same definition. Now we come to the same example that I had seen yesterday. So after having seen read all this that I kept telling you in the last couple of slides in terms of the SS code, how does the SS code affect everything based on the example that we had seen yesterday? You remember we had seen an example where we had said that the basic, if it were 50K, then the HRA of is 50% of basic, the special allowance is 25% of basic, and there is an employer contribution of 12%, which worked out to 1,06,000. And then above the gross was are two components of gratuity and EL, and that makes for CTC, which I call as the total, which I call as the total remuneration. Now, yesterday we had seen when we had applied the test of exclusion, the exclusion was working out to 28%, which meant, as I said yesterday, that there is a higher composition of inclusion for Social Security, which then means that there is a lot of contribution to be made for Social Security. Their take home will come down. The contribution by the employer will also have to go in terms of the total remuneration. Now, on the right hand side of this example, with the new definition of wages, suppose the numbers are the same. What I have done is I have kept basic as 50, I have kept HRA as 50% of basic, but I have removed the special allowance to just 1,000, reduced the special allowance from 25K to 1,000. We are of the firm view that special allowance is an inclusion. Now, the EPF contribution, the employer's contribution is 12% of wages, not basic. So therefore, on 50,000, it will be 12% on 50,000 plus 1,000, because that is also part of wages. So it is 66,120. And I have introduced a new allowance to ensure that the gross salary is not different. It's 3,880 rupees as conveyance allowance. Now, we all know that conveyance allowance is an exclusion, is a specific exclusion. There is no confusion about that. So look at exclusions which are defined as exclusions in section 2Y of the code on wages. Now, the gross salary, okay, is the same. The gross salary is the same. In terms of taxability also, there's going to be no change. Why? Because the special allowance was earlier also taxable. Now we are talking of a situation where 1,06,000, 12,75,000, the person is otherwise also exempt under the new regime. But that let's not bother about the tax part of it right now. What I'm saying is this 1,06,000, 1,06,000 with the new definition of wages. This is how I have reshuffled. This is just an example, and you will have to do it for all your employees. This is just one example. Now, the gratuity will be 4.81% of wages. Okay. Therefore, it goes up from 2,405 to 2,453. Similarly, EL, if it is 18 days of wages, it goes up from 2,466 to 2,515. It's on wages. Now, what is the wage composition in the new definition, in the new composition of wages, which is 106,000, your gross is only 50,000 plus 1,000. That's what I've taken as wages, because that is the inclusion in the wage. The HRA is an exclusion, the PF contribution is an exclusion, and the conveyance allowance is an exclusion. Now, when we are so what happens as far as the CTC is concerned, as the total remuneration is concerned, before the change in the definition or the wage code, this person's total cost to the company or remuneration was 110,871. Now, with the new definition, it only increases by hardly 100 rupees. Okay, hardly 100 rupees. 1,10,968, 1,10,871. Are we compliant with this or not in terms of the exclusion and the definition? We will see that. And also in terms of the take home, which used to be 1 lakh, okay, because I have just reduced the employer contribution 6,000, the rest of the 1 lakh 6,000 minus 6,000 used to come in as bank account. In this case, with the change, he will get a take home of 99,800. Now I have assumed that there is no taxation. This amount of threshold does not attract taxation. Okay, assuming that you will have 12 lakhs plus the special allowance of 75K, therefore it will not actually cross. Now, so that is how the total remuneration changes. The cost to the company doesn't change much. The take home does not change much. What happens to exclusion calculation? The exclusions are HRA, employer contribution, conveyance allowance, and the total exclusions now become from 31,000, it goes up to 55,000. What is our 50% exclusion amount? It is 50% of 1,10,968, which comes to 55,484. Okay. We are our exclusions are under 55,484. They are because they are 55,000. Now, if you do the 55,000 on 1,10,968, it roughly works to 50%. It roughly works to 50%, less than 50%. Now, in this example, you have met the exclusion ceiling of 50%. You have ensured that your total remuneration and therefore the additional cost to the employer is minimum. And you have also ensured that the tax take home emolument of that employee is also very marginally reduced. Okay, as far as taxation is concerned, we have not factored taxation because this particular case of comp, which and the elements, I don't think will have a taxability based on the if the person has opted for the new regime. Here, I have also not factored ESI because based on this example, the ESI will not be applicable. Okay, that is why I have not factored ESI. But you will have to see your own comp structure, your people's, your salary registers, your comp structure in terms of geographical dispersion. Is those percentages different or not? This is just an example, but it only gives you that idea to be, intelligent enough. I'm not saying creative, intelligent enough to look at exclusion percentage, to look at taxation for the employee, the TDS part, to look at take home, to look at the total remuneration. These are four components which we will have to delicately balance, considering both the code on wages and the code on the social security. You'll have to be very clear on both the codes. Only then you will be able to arrive at a optimal compensation structure, which will be able to kind of balance, and that is what I call as balance the TDS, the take home, the total remuneration, which means the additional cost to the employer, and also meeting the 50% exclusion test. Okay, this is something example. I didn't work it out that way, but when I was making this example, I found that probably this was a good way of, making you have an example. We cannot do multiple iterations of these examples. You can do that without a problem. But once the basic or the basis is clear to you, which is very clear here, what I'm only trying to say is that you will have to not look at only one thing, exclusion 50% हो रहा है या नहीं हो रहा. Because at the end of the day, you will have to go to the employee and also explain it to that particular employee. अगर आप lopsided करते हो, balance नहीं करते हो, then it's not going to fly. That is what I'm saying. So the balancing has to be in terms of, or it is not going to fly with the employer, because the employer, as a not-for-profit, doesn't have money in as capital as reserves, which he will say, oh, ठीक है, we will put money from our pocket. At some point of time in future, you might be able to pass on the total remuneration in increment liability. Here I'm not even talking about the retrospective liability, which we really don't know what is going to happen. So I'm also going to tell you that be intelligent in terms of understanding what the retrospective is in case it is there, and where current running grants are going to close, where you have some flexibility in terms of, loading that. Uh, be on the lookout. Have a calculation of what that retrospective liability might be, and can, during the period of the next 4 to 6 months, for running grants which are going to close, can you accommodate that particular incremental liability if it were really to become an incremental liability on account of gratuity and EL majorly, is what we are only going to say. So that is something. This is one very standard example that I have given. Now, if there are more components, because I've taken only very limited components, bigger organizations will have basic. They will have this thing called special allowance as other allowance, and I have also said that if we were to look at this special allowance being retained as a uniform allowance, don't call it as an other allowance. Call it as a special allowance. Don't call it as other allowance, because other allowance, then the department will start asking, what is the composition of this other allowance? Okay. I have not even looked at other ways of expenses for defraying the expenses due to the nature of employment. I have just put the conveyance allowance as a residuary kind of an allowance. You can look at more components, okay, of the exclusion to be able to factor in for reducing your inclusion part of the wages, so that your exclusion can be loaded and the exclusion becomes close to 50%. In which case there will be an impact on your social security, but it will be less. The higher the current basic and special allowance combination, okay, in your salary structure, the impact will be minimal. This is what I want to tell you. So please do your homework. These 2 sessions are not for purposes of practically doing those homework, and that has to be by organization. So that is something that is the critical piece. I move on and say action points in the code. So this is what is it that you should look at or should start thinking about. Please revisit your HR classification, which means what do you want your regular permanent employees to be? What do you want your FTEs to be? If you have contractual employment status, many organizations have fixed term employment. Those are employees, but those are not permanent employees. So you have to have that distinction between permanent employee and employee on contract with a fixed period. Every employment is a contract, but then what distinguishes between so-called permanent or regular employee and fixed term employee is the period. Okay. Other than that, for the same nature of work, there can be no distinction. Now, the question is contract labor. So we have a lot of work that we do through engaging people on contract. Now, one is that those workers is not within the purview of the Contract Labor Regulation Act. We don't follow that act actually. We just give a contract for services. Contract for services as a contractor, as an individual contractor. Now, as an individual contractor, okay, under Section 194C. Now, I want to tell you that this so-called contract business is going to get closed under the new OSH code, and we will see that. That as far as the consultants are concerned, they are not employees. Now, please remember there is nothing like a definition of consultant. We have coined that definition for convenience. Why? Because that particular person is has no classification. And a consultant essentially refers to a person who has professional or technical skill. And that professional or technical skill has to be availed by the organization for a certain period and for a certain purpose, not for a long period of time or for indefinite work. Because then, if that becomes the consideration, then that consultant contract in judicial pronouncement and courts has actually ended up becoming a deemed employment, because we just want to do the 194J and deduction and get out of it, and not even look at that person as employee. That's not the right way. Now, I am not going to say whether you continue with consultants or don't continue with consultants. That's your decision. But consultants have no place as far as the codes are concerned. That's what I want to actually say. And consultant engagement, which is in the nature of employment, which is in the nature of deemed employment, will be treated as employment and may have retrospective liability. अगर किसी का दिमाग फिर गया तो. So that is something that I would want to say. How do you phase it out is something that you will see. But you now have two category of employees for you. One is regular without an end date, and one is FTE with an end date. The contract for core activity or your for your objective of your organization is now prohibited. And consultant, I have also already told you. Understand the impact based on definition of wages. So EPF, ESI, gratuity, and EL. Those are four areas because all of them are based on the definition of wages. So you'll have to do that and see how you balance out. That's what I say. Uh, Examine both the SS code and the code on wages while tweaking your compensation structure. So don't just work on COW or SS. Work with both the codes and balance out the employee taxability, the TDS, take home, additional cost because of the total remuneration going up, take home salary, all that. How much is the social security benefit? All that has to be understood. Uh, Consider incremental funding of an incremental gratuity and EL liability once there is more clarity. So I don't think you should just jump into the retrospective liability applicability of these provisions. Let's have more clarity on that. Is it that they are saying that for ongoing contracts, the applicability of the definition of wages uh, will be only from the prospective date and not from retrospective date for ongoing contracts. Okay. For new contracts, there's no confusion. But for ongoing contracts, is the retrospective applicability there or not? Or will we have a cutoff and after that the prospective applicability will be there? I think a lot of the LICs of the world will have little more clarity because as you go to them for purposes of topping up your fund, they will be able to give you some clarity also from time to time. Consider keeping PF ceiling wages at rupees 15 if you have or 25 or whatever. If you have major problems with your comp structure, it's not necessary that the EPF has to be on the basic beyond 15K. Provided you are able to protect take home, provided employees are prepared to forego future benefits, and still you are compliant with the law. Okay, that is something that has to be seen. Now, uh, PF and ESI thresholds may get revised. Okay. Mandatory funding of gratuity, if you have not, if only provision has been made, that has to be converted into insurance. So you'll have to look at for funding of that policy. Uh, Same employment terms for FTE as far as this thing. Opt out is permitted for establishment under EPF and ESI, but you have to be careful that there are very strict provisions, and you will have to get that permission before you can opt out of the existing registration under EPF and ESI. Now I go to the OSH code, and the OSH code actually for our purposes is only all laws in that code really do not apply to us, but only the Contract Labor Regulation Act. Now, here also the Contract Labor Regulation and Abolition Act of 1970, we really care little about it. Now, as per the current definition in the 1970 Act, it is for applies to establishment employing 20 or more contract labor or contractors engaging 20 or more in the last 12 months. So there has to be a registration and there has to be compliances. Please remember the contractor is also an employer now. License has to be got by the contractor and registration has to be done by the establishment if the 20 threshold is crossed. So the act used to talk about wages, working hours, welfare provision. We have had people on contract, but we have never kind of had any major compliances on the CLRA, that is the Contract Labor Regulation Act. Okay. So when I was talking about one license, that license was if an establishment is to engage contract labor. Now, please remember that the threshold for contract labor itself has been increased from 20 to 50. So this is only one act that is probably applicable to us, and we will see what happens to this contract business really under the OSH code. So there are these chapters which in the act that I have mentioned here. The registration is chapter number 2. This is the single registration, the LIN that I've been talking about. So the registration of your establishment for getting an LIN is under the OSH code, but it will cover all codes. Duties of employer and employee, that's okay. The fourth and the fifth point is relating to safety and health conditions. Now, the fourth point is occupational safety and health in terms of what the structure will be. You know, the OSH boards, the national and the state boards. वो बताता है chapter number 4. So the organizational structure for OSH. Now, OSH was never given that kind of priority except specific types of workers. Okay. तो अगर आप OSH कोड के अंदर जित all the uh, acts that have got subsumed, virtually nothing, none of them applies to us, which means that they were for specific types of employment given the hazardous or arduousness in the nature of work. But now it's covering everybody. So please be clear. They are covering other types of workers that is clear, but they are all covering everybody. Now, the SS code has had social security for different types of workers also. Here, so the OSH chapter 4 is the structure. The chapter 5 and 6 are the conditions relating to what has to be ensured for health, safety, and working condition, and what has to be ensured for welfare provisions. And the OSH advisory boards, both at the national and the state level, will formulate OSH standards which will specify what will be the health, safety, working conditions, and welfare provisions. Okay, but the code specifies what should it be actually. Okay, but the rules in terms of what how it will be implemented or operationalized will be formulated by the national and the state OSH board. The hours of works and annual leave. Now you remember hours of work used to be primarily the part relating to the minimum wages and things like that. But it is made part of in the OSH code. The annual leave was never a part of any of the labor codes except the states. Okay. Uh, so that is where it was, or specific acts where the Factories Act was there, but that is now made part of the OSH code. The rest of them are registers, you know, attendance register and register of employees and all that. And chapter 11 talks of a specific category of worker, which is called the interstate migrant worker. Now, this interstate migrant worker means somebody who's a worker who has migrated from another state to your state to work, and there are some benefits to be given to ISMW also. So that is how the chapter layout is there. Now I'll like to go to the key provisions. So the duty of employer, you know, you saw chapter number 3, duty of employer. I am an employee. Employee's duty is to see that they don't cause any harm. But duty of employer is to see that there is no hazard causing employment injury or occupational disease. So that is one. That is so this is specifically state taken from the code. What is the duty? The duty is to comply with the OSH standards. The boards will make those OSH standards, and the employer has to comply with the OSH standards that have been formulated. Annual health examination. So they have said free of cost annual health examination beyond a certain particular age. 40 years is what has been said. Many of the state rules which have come as draft, the age limit is 45. Again, annual health examinations, some of the states are specifying the type of establishment only which will be covered for annual health examination. So before jumping into annual health checkup or examination of employees and how will we do it, and they are in remote areas and this and that, please look at, because there will be a time frame provided for annual health examination. Please look at what the final rules will specify in terms of annual health examination. Working environment is safe. Now we will say what is safety basically. Disposal of hazardous waste. Appointment letter is mandatory. Okay. So anybody who you have engaged, whether on contract or on your payroll, an appointment letter is mandatory. Now, most of the states have already, in their state rules, given a template of the appointment letter. So, as far as wage slips are concerned and appointment letters are concerned, the idea is not to scrap any of the two documents, but to see whether some components which are mentioned in the template are not covered under these two documents, and to cover them to ensure that the template, whatever you are doing right now, is consistent with the template. There will be no charge from the employer. So please remember, for health, safety, and wellness or welfare, you will have to ensure that the employer brings in the money. OSH standards to be formulated by the national and state OSH boards. As far as the as far as the hours of work is concerned, again, this is something that has come from the laws in the US, in the COW, the code on wages, but it's come here now, and it's a specific um, you know chapter. You see, chapter number 7, as we are seeing chapter number 7, hours of work. So it said that the maximum hours of work per day will be 8 hours. Okay. uh, but there is a catch here. The catch is that while the maximum hours of work will be per day will be 8 hours, a spread over can be allowed up to 12 hours. This used to be also a provision up to 10 and a half hours, but this spread has been permitted up to 12 hours. Please remember, beyond the maximum number of hours per day, for the spread over, the overtime provisions will apply. Now, because this some of the situations are 12 hours of work, and the maximum number of hours per week yeah, per week is 48, which I have not mentioned. Okay. So the minimum number of hours per day is 8 hours, and the maximum number of hours in a week is 48 hours, and the maximum work days per week will be 6. But because the spread over is allowed, therefore you will see a lot of this social media business where they say, now you need to work only for 4 days. Why? Because 4 into 12 is 48. And you will fulfill the condition relating to spread over, and also conditions relating to the maximum numbers of hours, which is 48. Okay. Okay. 48 hours. So that is why the people have been saying that it will be a 4 day week and the rest of the days are paid leave. But please remember, in case of spread over beyond 8 hours, there is the overtime provision will kick in. However, I want to also put a caveat here that the overtime provision, as in the AFSH code, apparently is looking to apply to a worker. But that clarity is not there. Again, the rest interval of 38 minutes has to be given after every 5 hours of work. That is still the provision which was there already. 6 days in a week, provision was already there. 1 week weekly holiday, paid holiday, the provision was already there. Comp off, the provision was already there. But they say now in the provision that if you are working on a weekly holiday, then the comp off has to be availed within 2 months following the month in which you have worked. Suppose you worked in January, by March you will have to avail that. So please see what your HR policies are. Uh, does it say 5 months, 6 months? Here, the OSH code now talks of comp off to be availed within 2 months following the month in which the employee had worked on a weekly holiday, or the compensation off was he's eligible for compensation. Uh, comp off, sorry. Now I've put down the chapter 5 and 6. So we saw chapter 5 saying health, safety, and working conditions. क्या क्या होगा? Cleanliness, hygiene, temperature, ventilation, potable drinking water, lighting, toilets, waste management, separate toilets, whatever. So those are all the provisions will which will become stand which will get converted into OSH standards, and those OSH standards in all these parameters will have to be followed. That might entail cost, okay? And when you will have to report in your single return, you might also have to report what are the health, safety, and working conditions in your organization under the inspector cum facilitator model. As far as chapter 6 in terms of welfare provisions are concerned, they say washing, bathing, canteen, first aid box, etc. Those are all there. So please wait for the standards to come on health, safety, working conditions, and welfare, and then go ahead with whatever needs to be done. But however, since we are also covered, there is, if we are already doing that, no problem. If we are not doing it, we will have to do it. Doesn't mean that there will be incremental cost. Sometimes there is no incremental cost also, but we must be compliant with the OSH standards in terms of health, safety, and working conditions is what we are saying. Now coming to what is the provision relating to contract labor. Contract labor now applies in case of 50 or more contract labor employed by an establishment, or more than 50 contract or labor engaged by a manpower contractor. So from 20, the number of contract labor to be engaged, which will bring you within the purview of the chapter on contract labor, uh, will has been increased from 20 to 50. Chapter number 11, if you can see, contract labor and ISMW. This is the chapter. What is being said is, and this is a very major change for not for profits, because we are so used to this so called contract business. Okay. I see when I do due diligence, I see several organizations which are saying we don't have an employee. We have some volunteers, only volunteers, but we are paying volunteers also. I don't know. So, you'll have to think about all this. This is not going to continue. Either you have contracts or you don't have contracts. Now, because during due diligence they have to show that there are people engaged with you, they will give here and there. But here I want to tell you, this is the biggest change. The employment of contract labor in core activity of any establishment is prohibited. So no more contract labor can be engaged in your core activity. Now, the code defines what is core activity and non-core activity. I have taken this from the code only, no mixing of words. So, what is the core activity of an establishment? Now, the question is, can we engage contract labor or not? This is what I'm answering for you. And the code says no contract labor if it is in core activity. What is core activity? An activity for which the establishment is set up. So what are we set up for? We are set up for service delivery through programs. Is it not? As not for profits, what is our objective is to serve the community by way of service delivery to the beneficiaries. Now, when it comes to core activity of an establishment, all those activities which is program implementation is your core activity. Okay. The definition says any activity which is essential for such core activity. So there is a string attached there also, but I am not getting into that string. I am only saying that any activity which you think is your core, because as a not for profit, our core activity is program delivery, service delivery, actually not program delivery. Service delivery is uh, you know uh, our objective, the purpose for which, the objective for which we are set up. So all those activities which are activities for which the establishment is set up is a core activity. That is how. Now, non-core activity includes, so they have also said what does not include as non-core: sanitation, security, canteen, catering, loading, unloading, basically support services like hospital or guest, basically hospitals is, not there, guest houses, courier service, construction and maintenance, gardening, housekeeping, housekeeping, laundry, transport services.
including ambulance and any intermittent activity. Huh? Any intermittent activity, even if it might otherwise be core activity, your core activity. So if some core activity is intermittent, now what is the meaning of intermittent? That it is not performed for more than 120 days in a year. But if it is performed for more than 120 days in a year, it is no longer intermittent. And therefore, if it is a core activity and not intermittent, it will fall under the current definition of core activity. ये मैं आपको whatever I am telling you, please listen and see each of these things. I don't think there is any session that has been held with the view to explain to the not-for-profits. Okay. So these two sessions are only for not-for-profits, for people like you who have to understand. Now, the code also says that government will appoint a designated authority to advise on what is a core activity. So while the core activity has been defined, my idea is that they will say anything which is part of, you know, engaging manpower for delivering it, engaging this. Now, the point is that the government now is, while the government has said core activity means this, the designated authority will definitely throw more light on what is core activity. Now, any activity for which the establishment is set up is very clearly defined. Now, I go to some ways of testing. Now, what are some of the tests that can be applied? And there are exception to allowing contract labor in core activity also. In the new slide, in the next slide, you will see. So what are the tests? One is whether the process is incidental or necessary for the particular occupation. Is service delivery incidental or necessary, or is it inevitable for your occupation? That question you have to answer. Is it of a perennial nature or is it of an intermittent nature? Please remember, if it is of perennial nature, then it should not be done through contract. That is what. So we are trying to apply tests to see whether contract labor is justified or not. Intermittent work is possible even in core activity through contract labor, as I showed you in the previous slide. Okay, if performed, if it is 120 days in 12 months, whether it is done ordinarily through regular workers. Okay, in other establishments, so similar not for profits, are is that work done by regular or contract workers? That's the third test. The fourth test is it whole time workers, whether it is sufficient to employ considerable number of whole time workers or not. So should we employ, because we really don't know when grants will come or not come, therefore employing whole time workers might be a problem. So these are some of the tests that you'll have to apply. And while the code says that contract labor in core activity is prohibited, there are these three exceptions for engagement of contract labor in core activity, which is also provided in the code. The normal functioning of the establishment is such that the activity is ordinarily done through contractors. अगर वो contractors के through करी जाती है, then these exceptions for engagement of contract labor and core activity will apply. The activities do not require full-time workers. Okay, do not require full-time workers for major part of the working hours in a day. Very difficult to justify that. Okay, and if there is a sudden increase of volume of work in the core activity which needs to be accomplished in a specified time, यहाँ पे हमको थोड़ा सा leverage मिलता है. Okay, so if you get a lot of, but again, these three exceptions are included in the code. The previous slide I told you tests to be applied, they are tests to be applied to see whether regular or contract. But here three things are done by contractors, do not require full-time employees, and third is the sudden increase in volume of work. Those three parameters, if we are able to justify, then contract labor can be accommodated in core activity also. Registration and license is required for contract labor. That's all right. Appointment letter is mandatory. Okay. With terms and conditions, You'll have to specify wages, the wage period, deductions, overtime, and the state rules will specify the template. You can go to some of the draft state rules and see the format of the appointment letter in the OSH rules of the state. You can see the format of the wage slip also. So I'm not saying that the appointment letter and wage slip need to be scrapped or need to be wholesale changed, not required. In fact, you will not require to change it. You might have to just tweak it a bit. Attendance register, including digital records, is acceptable. So registers and records will also include details of the employees, but also their attendance, their leave, and all that. That is also mandated. Night shift is allowed for female workers. This is something that has now been allowed with consent, that is between 7 and 6 p.m. 7 p.m. and 6 a.m. with safety measures. So this is permitted. Similarly, employment is permitted for women in hazardous jobs. If you remember equal remuneration chapter, when we were saying yesterday, it said no hazardous work. You cannot engage women. Now, hazardous work or process is specified in the first schedule of the OSH code. They are now specifying which industries are hazardous. Okay. But now women can be with consent and with safety measures. Canteen for 100 and more employees and creche facility for 50 and more is the same provision. Overtime at the rate of 2x the wage rate. Now, here the definition of wages is what is going to be there. Okay. Uh, Again, I want to tell you the OT provision is there's lack of clarity whether OT is going to be applicable only to workers, because the OT provisions in the OSH code talk about workers all the time and not employees. Uh, with consent, the maximum is 125 hours in a quarter. Presently, it is there, okay, but to be specified by the respective governments. Now, the Delhi government, when it has notified the draft OSH rules, it has proposed 144 hours, okay, 144 hours of overtime in a quarter, as against 125, which is the present position. You will have to see what it is. So I again want to tell you, on overtime, please wait for clarity in terms of applicability to employee or just to worker. As far as EL is concerned, which was never a part of any kind of regulated provisions, now annual hours of work and annual leave. So this annual leave is the EL, or privilege leave as we call it. Now, the earlier it used to be 240 days. It's been reduced to 180 days of work in a calendar year. It's one per 20 days worked. Okay. So it can be, if you make it with 365 days as days worked, then it will be 18. It will be 13 to 15 based on whether you consider it as 6 days works, 5 days worked, actual work. So days worked is something that is still as a confusion. So I've said between 12 to 13 to 18, depending upon what is your understanding of days work. One per 20 days worked. Leave encashment rules. Okay. So the code says that you can carry forward only 30 earned leave as per the code. As per the code, 30 EL can be carried, and if you carry if there are excess earned leave, they can be encashed. Even the 30 carry forward uh, leaves are eligible for encashment at if desired by the worker. So please remember, there will be additional liability on account, additional financial burden, not liability, additional financial outgo on account of encashment of EL, because excess leave will not lapse but will be encashed as per the OSH code. Okay. So uh, I have mentioned here both OT and EL uh, uh, apply to worker and not employees. What is mentioned here? So therefore, we have to be very slightly careful. Okay. But here the code says 30 leaves, 30 EL can be carried forward only, and the remaining leave which are not cannot be carried forward can be encashed. Even the leaves that you earn during a particular calendar year, please remember the calendar year is what is important, because all leaves as per the codes now is based on calendar year and not financial year. The ISMW provisions are where a worker has come from other state, 10 or more, with wages not exceeding 18,000 per month. So the ISMW will be entitled to journey allowance to and fro once in a year for himself and his family. Portability of benefits will also be possible, including the PDS, the public distribution system. So that portability will mean that they will get the benefit of PDS in the place where they are now presently working. Registration will also be required. I have also already told you about registration. Now, action points under the AOSH code is prohibition of contract labor in core activity. Now, I have said there are three exceptions to the core activity. So, in core activity, contract labor can be applied, but with three exceptions. Volume of work, is it ordinarily done by contract labor? And do you not require regular workers? That's you'll have to decide. Otherwise, it will be a matter of litigation. Through contractors, not requiring full-time workers, and sudden increase of work are three exceptions to the prohibition on engagement of contract labor in core activity. In non-core activity, contract labor allowed. Health, safety, and wellness provisions will have incremental cost. So you'll have to factor that in because these provisions will have to be made without any charge to the employee. Appointment letter, annual health checkup, again, I have mentioned, refer to state rules. EL compliances under the code uh, should be ensured both from the point of view of the OSH code as well as the state's Shops and Establishment Act. Okay. If the Shops and Establishment Act is applicable to you, if the Shops and Establishment Act is applicable to you, which means that the definition of establishment covers charitable institutions squarely, okay, then you will have to ensure that the compliance regarding EL, okay, is and other provisions like hours of work are both in terms of the OSH and the SND code and the central codes going to override if it is inconsistent. So you'll have to be very careful when you are actually doing uh, a walkover between the Shops and Establishment Act and OSH on various provision where there is commonality. That is what I'm saying. Annual encashment will have monetary burden, not liability. Financial burden it will have because people might ask for their uh, leave calendar is the. So these are some of the changes. The major changes is on core activity. Now I'm industrial relations code. I said you don't have to bother. Why? Because the word industry, you see this definition here of industry. I have again taken this definition of industry from the code. It says industry does not include, but it says that industry के अंदर capital invested है या नहीं है doesn't matter. Profit करना है या नहीं, motive to make gain or profit is not going to decide industry. So that is important to understand. But then they have come up with specific exclusion, and that is why I say exclusion hai, then you are covered, but does not include institutions owned or managed by organizations wholly or substantially engaged in any charitable, social, or philanthropic service. So as long as this is what is excluded, we are excluded from the IR code. I have made some key impact areas of the code, but I'm not reading them out. Basically, it's on, trade unions, on strikes, on FT employment also they have included it, recognition of trade unions, grievance redressal, reskilling fund where there is retrenchment, all those provisions are there. Now, so I have done the three codes in detail, and now we have the key takeaways from here. The key takeaway is that NGOs cannot be in denial on applicability of SS laws. Okay. Expanded coverage of the labor laws for NGOs, minimum wages, ESI, payment of wages. If you are not exempted specifically like the IR code or the PBA, all acts are applicable to not-for-profits unless your activity is not. Okay. Provision in the new labor codes are substantive. The implementation will be done by the state and central rules. Okay. So the rules are being framed for implementation of the codes both by the center and the state. but the labor codes are substantive, which means they will prevail. Now, since labor is a concurrent subject, center and states both, as I said yesterday, they will have to legislate, and the state rules cannot supersede the labor codes. That is, they have to be subservient to the labor codes. So, as long as the labor code provisions are firm, you can be more or less assured that those will have implementation details, but they will not override the provision of the labor code. During transition period, existing rules and regulations under the said acts, the acts which have got repealed, will will remain in force till the time, unless they are in conflict with the courts. So till the time that the full implementation happens, the existing rules and regulations will follow. Otherwise, all everything would have come to standstill. So labor codes, labor related justice, labor related matters, or compliances, the old rules and regulations are still in force as long as they are not in conflict with the labor codes. Okay. Now the draft central rules, the four central rules for the four codes, they have been pre-published on 30th of December. Okay. And they are available in public for comments up to 45 days. And then they will be notified. Rules by the states are being made. Some states have made some rules, few rules. Means all, not all the four codes they have made rules. Some one code they have made, two codes they have made. You can look at them. But the idea is that the Ministry of Employment and Labor and Employment is looking at April 2026. Now, I am not saying April 2026 is the 1st of April they will start. They are already in force, but the full implementation of the codes with the rules in terms of actual implementation may happen sometime in April 2026. So you have at least another about 2-3 months before you can uh, uh, adjust everything within your organization. Okay. I am saying that examine passing on incremental costs because of the labor codes to running grants as far as possible, and also donor negotiations for new business proposals with the incremental costs going forward. सो जो आपका न्यू बिजनेस वाला बंदा है उसको इन सारे कॉस्ट की इंक्रीमेंटल नेचर क्या है ये पता होना पड़ेगा और आपको सपोर्ट करना पड़ेगा सो दैट दे कैन बी फैक्टर्ड इनटू न्यू प्रपोजल्स. And as long as the existing running grants can accommodate any incremental cost, please pass that on. I mean, that is how I would suggest, because no donor will say you cannot pass on incremental cost. Now, retrospective liability, how much can you pass on is again a big question. It will depend on the kind of donor you have, the amount of money that is available to, accommodate. And I am not give you a very more elaboration than this. I can only say you will have to be here innovative slightly in terms of seeing that if the liability can be passed on, because we have no reserves in our hand to accommodate, we are not a for profit. But if the retrospective applicability is going to be a reality, then it will have major implications in terms of liability. The other key takeaways are uh, your own HR and finance process, new processes as well as existing process reengineering. Okay, because of the expanded coverage, because of new provisions, and this might require incremental manpower as through with the new codes and the new rules, because we will have expanded coverage, and because of the fact that reporting compliances are all online digital, there will be more oversight. Compliance framework has to be ensured. So that is why I say have good manpower, because there are stiff penalties. Okay, since everything is web based and integrated, so you nothing will get out from here and there. And penalties one fixed, although there is composition of offense one time, but then other after that the penalties are very stiff. Review and revision of your HR policy or manual and other particular provisions in other policies. Wait for the final rules formally, uh, or you may draft the revision. Once they get notified or formalized, both the central state rules, the labor codes are there, then probably there is very little room for any changes. Engage with your teams. This is one thing that I will say, uh, in terms of orientation on the codes, including what will change for them. Okay. Once you have done your homework internally at the management level, do engage with teams, because this is not going to affect just the organization. It's going to affect everybody in the organization, all employees in the organization. These are very practical tips. It's not as though you can go to the teams and say, well, this is what we have changed as the new comp structure. You will have to pay more towards social security. You will have less in terms of your take home. You will have more tax liability. Nobody is going to buy that. Okay. So therefore, please be very mindful of how those changes are to be done and how little the impact is with with full compliance on people's pockets, on people's discomfort. All that has to be also taken into account. While making preparation, right now maintain status quo for more time, for some more time is what the takeaway is. Okay. Look out for guidance from the ministry. So please be reading, please keep reading. Is there a possibility of the threshold going up? What is happening? But last, be consistent in your approach. Means the course of action that you will follow, you will have to toe it. If you want to treat special allowance as an inclusion, please treat it as an inclusion. The government is looking at exclusion not being more than 50%. Why? Because in international labor position, the countries look at social security contribution as not being less than a certain percentage of total remuneration. The same concept has been brought in by uh, by government. So if you are making inclusion, if you are making something as inclusion, the government will not take it very with great difficulty, because exclusion is something they will look at more closely. Inclusion is not something that they are going to see closely. So this is the compliance checklist that I have for all the three codes: the wage code, the SS code. I'm not going to read this out because we have already done it. Okay, full and final deduction, equal remuneration. Here on the SS, the flexi hiring, gratuity, retrospective. So I've just put the checklist here, and then you can take it out, each of these codes, and see where you are on these various points in the checklist and what needs to be done. What do you have to do about employee classification? Do you have to look at the categorization of employees now in view of these all these changes? How do you look at the basis of once you have done the definition of wages, then what is the basis for EPF, gratuity, EL, and how does it differ from the current deductions and benefits? Is something that is the checklist. So I have completed the codes primarily for you. We have about 20 minutes. Now I'll give 10-15 minutes for the state specific laws, okay? Because this is also very important, okay? And therefore, this will give you a full roundup of what are the labor related legislations in this country for not for profits. Now, when we talk of the SNE Act, this is a state act, okay? Now, the biggest challenge in terms of the state SNE Act, and I told you the state SNE Act and the OSH code on hours of work, earned leave, there has to be consistency. Okay. So you'll have to be mindful of that. But the biggest decision whether the state Shops and Establishment Act is applicable is to see the definition of establishment or commercial establishment, whether charitable institutions are covered or not. As I said, the Delhi Act clearly says it's covered. So you are covered. So you'll have to see. So the working hours, opening, closing, holidays, children employment, leaves, including earned leave. So the leaves is not just earned leave, but it also includes sick leave and casual leave. So please remember, we normally say when earned leave, where does it come? We talk about the SNE Act. We'll not have to say it also comes from the OSH Act. But the sick leave or the casual leave also come from the SNE Act, the overtime. Now, annual privilege leave or annual leave in this SNE Acts generally are in the nature of 240 days, which has been reduced to 180. So if it is in terms of inconsistent, then 180 will prevail. 1 EL for 20 days, that is something that is part of the OSH code. Carry forward of unutilized EL is not specifically governed by the S&E Act, but the OSH code says 30, maximum carry forward 30. Sick leave and casual leave is governed by the state S&E Act. It's not governed by the OSH code. Now, the Professional Tax Act is where uh, wherever you are in present. So the S&E registration is in the state where you are registered, but the professional tax is wherever you are carrying on your business. So the act is applicable to all states except 7 states where I have mentioned, for all your employees, not for your consultants, not for your contractors, where you people are in your employment, and you as as an establishment also are required to pay professional tax wherever in whichever state you are. So you'll have to obtain the PT registration and get your deposit the money. The professional tax, the maximum deduction that is permitted is 2,500 per annum per year. Okay. And there will be an exception for there will be slabs of income, and there will be a threshold up to which no PT will be applicable also. There can be cases where handicapped women may be exempted from PT. So you have to look at the state act to see where clearly what category of employees are not to be, from whom not to be deducted. But this is an act where there is uh, uh, penalty for for violation. So you'll have to ensure that this is complied with. Where you have multi-state, you will have registration in each of the state. Okay. Uh, so uh, deductions, deposit, that will all be dependent on the state act. Some have deductions and deposit once in a year, once in a month. Return filing once in a year, some of them 6 months, 3 months. So you'll have to see the Professional Tax Act to actually see what is the provision relating professional tax in that state. But the professional tax is applicable to not-for-profits as an establishment in the state in which you are working, as well as the employees in that state, because the benefit of professional tax goes to that state, like GST. The POSH Act is something that you all know. So I just want here to mention that these acts are not part of the labor codes. These acts are still coexisting with the labor code. So you don't think that POSH has got removed or PT has got removed. PT and SOPs and Establishment Act are state acts, whereas POSH is a national act. Again, you must all be knowing that 31st January, you'll have to submit your annual POSH report. 10 or more employees, if you have to have the ICC and all those provisions that you have. Okay. The POSH policy is a statutory policy. Okay. So I'm not going to read out each of these. I'm sharing this with you so that you at least have a broader glimpse. The Apprentices Act. So when you have these interns or trainees, this is you have no act actually. So you just engage somebody on intern. Intern laga liya maine. So intern is also a big category of worker in not-for-profits. But please remember, the act that governs interns or trainees is the Apprentices Act of 1961. Okay. But this act is applicable when you have for establishment with 30 or more employees. Up to 30, it is voluntary. Less than 4, not necessary. 4 to 29 is voluntary. 30, you have to engage interns if your organization is can provide training to people. 2.5 to 15% of the workforce. Okay. Uh, all those things have been defined. These are not workers. These are not employees. These are not employees, and therefore the laws do not apply to interns. Okay, they are not employees unless they become employees after training and hired as employee. So there are stipend rates which have been provided for various types of interns, and where it is not provided, you have the optional trades, which I have mentioned, which can be defined by your establishment. If they are not covered under any of the trades like the designated trades, meaning the trade, graduate, technical. Sometimes you may have your own optional trades. Okay. So, uh, you know, you have to be reporting on contracts for apprentices. You'll have to transfer the money to them. You can also avail of the NAPS, which is the National Apprentices Promotion Scheme Part 2, where the government is also contributing. Okay, NAPS 2, where 25% of the minimum prescribed stipend, which is capped at 1500, is also provided by the government. So that can be a reduction in terms of the liability through the DBT. So I have mentioned all this for you, just for you to have a look at it. Okay. With that, we close today's presentation. I'm stopping it and I'm going straight away to the questions. Okay. Whatever be the salary components, can 50% of total remuneration be taken for providing social security benefit? So, what I will answer to this question, Neeraj, is you will have to frame your salary elements and your compensation structure. But you will have to ensure that the exclusions that you have made in that do not exceed 50%. In that case, if they do not exceed 50%, if they do not exceed 50%, they might be 48%. In that case, the government is not bothered because the inclusion component will be higher and they are interested mostly in that. So, as long as your exclusion in your revised or revisited compensation structure does not exceed more than 50%, excluding J and K component of the exclusion, then you are fine. You can say that social security benefit has to be covered based on that amount. Volunteers do not have any honorarium. Volunteer, the word itself means that you are not against an honorarium. So that is something that uh, you will have to ensure. This is something that I want to clarify. A volunteer is somebody whom you can only reimburse certain expenses in the nature for the nature of work. Can we restrict the basic to rupees? Yes, you can. You can restrict the wages to rupees 115,000 now. Uh, you can do that and you can have 1800, and that is something that is also being permitted. But please remember, the 15,000 itself might get revised. 10% EPF contribution is introduced in new wage code. Currently, rate is 12%. Exactly. So the new wage code has specified the contribution by the employer as 10%, not more than 10%. They can restrict it. The employee also to 10%, but it can be also on their increased basic beyond their wage PF ceiling, wage ceiling under the PF Act. So that is something that has been introduced. You can see the chapter on EPF, which has 10% as the contribution. And the reason for this 10% probably is because they might increase the threshold of the ceiling PF wages or the ceiling ESI wages. Will EDLI and admin continue contribution charges may change in new code? As I said, they have said not beyond 1%. Currently, it's 0.5% and 0.01%. They have said not beyond 1% and 0.25% of 1% as the admin charge. This is what they have said. So we'll have to wait what it's going to get finally notified. It's possible because the EPFO is struggling in terms of EDLI. Suppose because there is no contribution under EDLI, whereas it's an insurance scheme where people can claim in case of demise, as we have seen. Suppose we have not opted for ESI, but equivalent to that, we are providing GHI and GPA policy. Please remember, GHI, GPA policies are so group personal accident is something which is purely discretionary. Group health insurance is again purely discretionary for people who have crossed the threshold for purposes of ESI. This is discretionary, but this does not substitute your liability. Okay, but this does not substitute your liability for ESI. In case of ESI, as I said, even if there is not a single person is under the ESI threshold currently, you will still have to get a registration. Okay. Now the question he is asking is, we have not you will have to you will have to register for ESI and you can opt out after 5 years, is my understanding. Now, after 5 years, you can opt out, okay, and you can say the majority of employees did not, along with the employer, and the DG ESIC gives you a clean chit in terms of opting out. Then you can go in for the way GHI and group health insurance, and GPA is not mandatory as such, but you can go in for term insurance, personal accident insurance, all that is your lookout. But at this stage, I think the ESI registration will be there and the opt-out facility is only after 5 years. So that is the big catch at this point of time. After 5 years, if you opt out, you can definitely go to any private service provider to give you a group health insurance, as is being done for people whose salary is beyond 21K. So you have organizations which are under ESI, not-for-profits which are under ESI, which are covering employees which are coverable under the 21K limit under ESI, and the remaining are covered under GHI. Okay. What is mandatory insurance of mandatory insurance means that you have to create a fund for the payment of gratuity. You cannot just carry the gratuity as a provision in your books and not create a fund. Now, that creating a fund means that when you have to pay the gratuity amount is available for payment and is paid by a third party, which is the insurance service provider. Can we appoint a person on contract basis for more than 12 months without benefits? So I think there is no specific, uh, I have no idea of any specific 12 months for contract, but I can only say that for core activity, the contract basis, you cannot, unless you are able to find a way of engaging contract labor under core activity. Now, if the question is, can we appoint a person on contract basis as an employee for more than 12 months without any benefits? Then my answer is no. That employee will basically be given the same benefit. If you are saying only on contract basis without any benefit, I can only tell you that even for contract employees, the codes are clearly saying that contract employees will also be given the same employment benefit for the same work, not just FTE, but also for contractors, contract labor. Gratuity kept in reserve internally is not possible. No, you will have to transfer it to a group gratuity scheme and get an insurance. Can you elaborate mandatory insurance? I have already said that. So if a person is employed for 2 months, 7 months, can for 7 months, do we have to pay gratuity for 1 year by default? No, unless you have a person who has been given 7 months contract now and crosses 21, and prior to that he had already been given a contract for 12 months, 15 months, and then the amount, then if cumulatively it crosses 1 year and there is retrospective applicability, then the problem remains. But if the gratuity, if the contract after 21/1 to 21/11/2025 is for 7 months, it is not gratuity. No gratuity will accrue, but the benefits will have to be the same. Can we engage permanent employee for fixed term contract? Permanent employee will be without a fixed term. Hmm? The termination will be applicable both for permanent and fixed term employees. So the termination clause is not important. The difference between permanent and fixed term is basically, the period. Okay. Uh, I don't understand why how does it really matter, as long as a permanent employee and a fixed term employee are eligible for the same benefit, and if the fixed term employment is more than 1 year, then the benefit, there is no difference in the benefit. Okay, then you will have to decide what has to be done. So I would only say that permanent employees are should be your core employees, which are who are not linked to a particular project coming or going, and therefore when the projects keep coming, those employees should be considered as fixed term employees. and you will have to factor the benefits as for a project or permanent employee now with the new codes and the SS code giving the directive that the FTs will be eligible for the same benefit. And if the contract, if the project is for more than 1 year and the FT is for more than 1 year, please factor gratuity also. Don't you think that these provisions will make employment very expensive? I will not be in, I will not. So Jaswant, this is something that industry is talking about. Uh, uh, 11-month contractual engagement as employee is also possible without gratuity, but with all benefits. Uh, uh, giving another FT after 1 month of break also possible, and still giving it for 11 months, you can still escape gratuity. That is also possible. Now, expensive, yes, it will become, especially given the new definition of wages. Okay, given the fact that more contributions, given the fact that the thresholds might go up, given the fact that the minimum wages might go up, all that is going to definitely have an impact. After the completion of contract of 1 year of FT, if the contract is renewed for the next year, next 1 year, and the employee leaves the establishment within 6 months, so if within 6 months, uh, within 6 months, then only 1 year, okay, because it's rounded off to the previous 1 year as per the gratuity provision. But you'll have to see whether the period of 190 or 240 days has been completed or not. So that is the other test that you will have to apply when you will say within 6 months. But if it is within 6 months, okay, without the 240 days, then probably you will not be required to pay gratuity for more than 1 year. That is clear. If gratuity is will have serious impact on will this be counted as force majeure? And so I whether this is an act of God and force majeure, and will you be able to claim it from donors who might also say that this is a retrospective uh, you know past service cost when we didn't even have the project? Why should we pay? Those are all issues that are going to come up if there is retrospective. So I'm not going to scare you by saying retrospective gratuity, but I am only going to tell you this, that there is a possibility of retrospective gratuity unless the government says that the new rules relating to definition of wages will be applicable only for liability from 21/11/2025, and all liability, and this is where then it will become very difficult to set this up. It's not that easy. I am only saying if the government were to say, well, before up to 2011, whatever were the bases, we respect it, and that is there is no common basis. And from 21/11, only this basis will be there. I think a lot of readjustment will have to be made, and I really don't know how that will go. But be mindful that this retrospective liability is a hanging sword. I mean, that is what people have been talking about. If there are any ongoing EPF issues covering the period of more than 5 years, will this be reviewed keeping in view the new SS code with limiting? So under the new SS code, once the EPF chapter becomes applicable, the 5 year limitation for inquiry by the department will definitely kick in. This is very clearly there in the SS code. Okay, but so this is what I'm saying is that the EPF chapter, if they notify that it is, because the EPF chapter is still not notified because the EPF MP Act is still in force. But the day they say, well, the new EPF chapter comes in, that will be the day where you can backdate it to 5 years, and prior to 5 years it should not be applicable. Please explain EL 18 days of basic. So basically here the 18 days of basic is nothing. So the organizations have earned leave, and earned leave, uh, NGOs think that earned leave is a discretionary thing, okay? But please remember that if you are covered under the Shops and Establishment Act, until now, EL was part of the compliance relating to Shops and Establishment Act. Now it is additionally a requirement under the OSH Act. So days of basic nahi hoga, days of wages hoga up, okay? So now the EL will have to be calculated on the on 18 days because it says 1 day of earned leave for every 20 days worked. Now, organizations have been keeping it at 18, some keeping it at 15, depending upon how much they, what do they considered as days worked. So if you don't consider Saturday and Sundays as days worked, because the word days worked is used, but some of the more liberal organizations consider 365 days as days work because the person is employed with you. In that case, it is 18. That's how. With reference to this example, could we park entire rupees under conveyance allowance and remove special allowance from the, you decide. I have just give you a sample. If NPS is taken as an allowance, will that be part of exclusion? NPS is part of exclusion. If you have NPS, then the employer share will again be part of exclusion. Will gratuity, statutory bonus, etc. are exclusions in items and not to be part? So uh, gratuity is exclusion. Statutory bonus is clearly exclusion. Now ESI contribution. Okay, since EPF contribution is an exclusion, while ESI contribution has not been specified, okay, uh, uh, it should fall under exclusion. Okay, basically, I consider gratuity, statutory bonus, EPF, ESI as all to be considered as part of exclusion. Is it mandatory to implement leave encashment as part of CTC, as part of CTC, or optional as part of uh, wages? Okay, not as part of wages now. Leave encashment as part of wages, and go by what is the leave encashment and what is the maximum amount that can be carried forward. So accordingly, make provision now. If you want to change, if you are already having it very difficult to change it, but for organizations which now introduce EL, which did not comply with the SNE Act, but now have to comply with the OSH Act, you can consider 30, and that should be the basis on which you will have to. But if there is EL already being provided, then there is the retrospective applicability, and you will have to see whether you can reduce it. If you had 60 days, 100 days of carry forward, can you reduce it to 30? Because the SNE Act didn't have, but you know what we used to say, well, let us be 60 days. So if the guy doesn't have any job, at least the earned leave will give him this much. But the OSH Act is capping the carry forward to 30 and encashing the remaining. Fixed term, fixed term employee, I said, and contract employee is where you have a contract for them for services, not for employment. That is what is the basic difference between fixed term employment and contract work. And the contract labor is under section 194C for contract for services, not for employment. Now, so that is what I'm saying, Hema, that the contract basis for a fixed period of time is not important. Whether you can engage contract labor is what is the question in your core activity, not the period of time. So you will have now the consultant and contract workers actually to be shifted to fixed term employees, which are the which is the right way of employment. Of course, there is going to be a cost increase. Even for contract labor, you will have to go to the minimum wages now. You cannot just bypass the minimum wages. So the minimum wages also, if you were not charging, you will have to ensure that minimum wages, you have to factor it in your donor budgets. Okay. Which states have already rolled out the draft rules? Is there any list available? So most of the states had made the draft rules in 2021. They are now making those draft rules. None of the states has rolled it out. Even the central rules have not got rolled out. That is why I'm saying somewhere around April is where we think the central rules will get notified, and many of the establishment run states will also roll them out. These states might also bring in the shops and establishment, and other state acts within the purview of the codes is also possible. So please be careful. Are consultants to be fixed? No, the consultants are not employees. The new labor codes came into effect because some provisions depend on state level notification that being finalized. Many organizations are experiencing delay in full implementation. Uh, I don't think the delay is going to be considered as a non-compliance. Okay. So that is why I'm saying that as long as you are already complying, and some of the provisions that have come into force in terms of, the new definition is something that you might want to just put in place. But look at uh, giving yourself some little more time. I don't think the government is going to come heavily for non-compliance in the next 2, 3 months. But once there is more clarity in terms of, the implementation, the definitions being more or less firm, some more clarity to be given in terms of, thresholds, inclusion, exclusion, that will be the time when you should actually, but you can start working backwards in terms of your calculation. Consultants with whom we have made consultant agreement with specific output described in the agreement, could they come under gratuity provision? Consultants are not employees. And number two, if you have specific employee type deliverables as outputs, they are deemed employees, they are not consultants. Consultants duly engaged through consulting agreement with certain engagement like this consultant agreement is 1 year, and monthly consultant requires to devote 7 days in a month. All this is something akin to employment contract. Okay. So, but whatever is the nature of the contract, if it's a consultancy contract, it is not within the purview of gratuity. But if the consultant contract is of such a nature that it becomes deemed employment, and the employment is established and the consultant becomes an employee, then the gratuity provision will kick in. Devoting more than 15 days in a month is all employment related, because you are substituting the employee through consultant. What about the tax liability for an employee in case of leave encashment? Every year for excess leave, you will have to look at the earned leave provision. There is taxability. It will be part of tax. It will be computed for tax. Yes. So, Neeraj, I want to just say, do we need to pay gratuity under FT for employees relieved after 21? After 21, if you have relieved employees, then if the provision relating to retrospective is, something that the government notifies, then of course they will have completed 21 1 year, and if they have completed 21 1 year on after 21 November, they will definitely be entitled. That is what is the impression that we are getting. Similar, but if FT is engaged after 21 November 2021, then of course the 1 year starts from 21/11. But if they are already engaged and have completed 1 year after 21/11/2025, will that period from whenever they started up to 2011/2025 be counted for eligibility of gratuity, is the big question. What is the limit for accumulation of EL for regular employees? Same 30 days, as I said, under the USH code. Difference between consultant and contract: menial consultant is not an employee. It is for a limited professional technical job for a limited period of time. Contract uh, worker is where you have a contract for services, and that is not permitted for core activities now. Okay. And we engage a lot of contract workers. Okay. Most of our field staff is on contract. Okay. And most of the other people are as consultants. We hardly have employees. So that is the big challenge that smaller on medium sized NGOs are going to have, or organization can. So listen, 30 days is what they have said. The maximum amount of carry forward is 30 days. Now, I don't see any provision like gratuity where it says you can give a better term of 45 days. That is not something which has been mentioned. So the OSH code clearly just says the maximum amount of carry forward is 30 days. So I think what they are trying to say is that beyond 30 days, the leave should get in cash. This is the intention that we are getting. So you work accordingly. Okay. Is there any rule for annual increment of salary? No rule. That's your call. Can we recruit a resource person for specific hours, binding on the office timing, work with fixed amount instead of including them as an employee on payroll? So can we recruit a resource on monthly basis? So this is something which is, if it is, that will be the some kind of a contract worker that you will have, or you can have a fixed term employment with the hours of work being different. So listen, you can have a fixed term employee with reduced hours of work also, and therefore reduced compensation, rather than have a contract. But you will then have to see that for the work that it does, whatever is the payment that you are making to a full-time or regular employee is what you will have to give to that person. So it is better to have a fixed term employee, and the term of employment in terms of hours of work and the compensation can be changed. That is something that is left to you. Yes, so an establishment having more than uh, 50 uh, not ex he says establishment having more than employee 300 employees but not exceeding in any of the base offices. Yes, so the creche is by location is our understanding. This is what is what is clear. So if you have more than 50 employees at a location, then creche is applicable for that. Overall, you may have more, but not more than 50 in a particular location. Correct. We have not capped the PF contribution to 1800 currently, except those salaries are 50. Can we make any changes? Yes, you can make. You can make changes. Uh, Up to 15,000, it will be 12%, and above that, PF will be 10%. No, no, no. It will up to 15,000, you have 12%. Above that, if the once the PF chapter comes into force and it says 10% instead of 12%, then you can also have for above 15,000 10%, provided you are not adhering to the PF ceiling. So then it will become 10%. Because the employer share is 10%, the employee share can still be 12%. That is what I'm trying to say. This is what the chapter says right now. What I'm saying is that you can have 12, presently you have 12. Once the EPF Act gets repealed and they say 10%, then the employer share will be 10%, but the employee share can still be 12%. Okay, that is what I'm saying. So that is something that we'll have to wait and see. As we have employees working across multiple states, in Telangana, should we wait for clarification from the Telangana department will be what is relevant for you. But if you have multi-state locations, the state acts are something that are already there. There, I would want you to look at, the big question is that if you have multi-state locations, then will the central rules apply or the specific state rules? The answer is right now the central rules should be what you should look at, and the labor codes. 11-month contract, but escape from providing will only possible if all benefits are provided. Yes. What are the benefits? The benefits that for the same kind of work you are providing to the regular employees. I am not saying will it be rolled out. If it is rolled out after 31st March, please don't take my word as 31st March. Yes, they will say that now the codes are effective from November 21, but they will somehow or the other say that the full implementation has started from that day. And therefore the liability for implementation will become applicable from that day, although the applicability is still there. That's how probably they are going to tweak it, because there is a lot of work that the ministry has to do as well as the states have to do, and the organizations have to do. They cannot just brush it aside. It's not like demonetization. Okay, so that is why I'm saying yes, we start working on it, but the codes are effective is what I'm saying. Yes. Is the full implementation effective? I'm saying no. Once the codes rules are defined, both central state will then they say that the full implementation of the codes and the rules are in place, and that there is a transition from 6 months for organizations to, that's possible. So, but I'm not saying anything yes or no. Okay. Uh, and paid salary is of 15 days. Does that mean, so you will have to see what is the deduct more than 50% deduction. uh, Absence of work is whatever, for absence of work there is a deduction. If it is deduction more than 50% for absence of work, then definitely that provision is says that you cannot deduct more than 50%. So we will have to probably go to the authorities to get that approval. This is what I, Udaya, but I will get back to you on this. Okay. So the question is that if somebody is absent from work, leave without pay, okay, now, will you treat that as a deduction for absence of work or leave, or will it be considered as leave? Then then that distinction we'll have to see in terms of 50%, more than 50% deduction. Okay, that is what the question is. But we'll have to, I'll have to see and we'll come back to you. Should the leave encashment be calculated on wages? Now on wages. Up till now it was on basic plus DA. If for NGOs it was on basic, for government it was on basic plus DA. 11-month contract, but escape from providing will only possible that uh, if this is continued for many years, it could consider deemed employment. Okay, so I have already, I think somebody, Neeraj, has already given that question ka answer. So I think we have done most of the questions. Now, if there are any very generic questions, if there are specific questions of an organization, I think we will not take them. Uh, but if there are any generic questions on the labor codes that you have, then you please, can you kind of unmute? We can devote another 5 minutes to that. Um, I have answered yesterday the question relating to employee compensation, where I am saying that's a gray area. In terms of deduction being more than 50% for absence or leave without, or absence of work is not the same thing as leave without pay. Leave without pay, is it covered as a condition for non-deduction of more than 50% is the question that needs to be answered. That I will let Girija know. Any question that you have specific? So before that, the key takeaway of today's session is for us to understand clearly what is the changes that are going to happen, and look at all codes, not one code, especially when it comes to wage benefits. Look at all codes. The code on wages cannot be distinct from SS code, and that cannot be distinct from the OSH code. That is what I'm saying. So when it comes to benefits, monetary, non-monetary, all the three codes will be very, very clearly need to be understood. If you look at only one code, you are looking at one side of it. Okay. So आपको triangulate करना पड़ेगा before you are able to come up with a firm judgment on this is my action for my organization. So that's the key takeaway. The two slides on key takeaways summarize everything, which you can also read and have a look at. So yeah, so now if there are any quick generic questions, because this is the end of the short course that we have. I have tried my level best to make it relevant for NGOs and to answer as many of your questions, given the fluidity of the situation, but also not make you very scared or anxious of these codes. So as not for profits, we have to be very mindful. We have to also be mindful of our donor running contracts. We have to be mindful of our new business. We have to be mindful of our own resources that we might have as the the reserves and surplus over a period of time. How do we all do that? How do we have insurance? Are we carrying, if we have invested that money already as gratuity liability, that needs to be now shifted to an insurance uh, uh, company provider. Okay. Uh, so if still there is anything, then just unmute quickly and you can ask very generic question. So Neeraj has a question from FES.
Yeah, hi, Sharad. Hope I'm audible.
Sure, sure. Go ahead.
Yeah, I think looking at all the questions and the kind of employment that NGOs have, uh, a lot of non-profits actually engaging people on a contract basis, not even an appointment letter, but a general terms of reference and an agreement. So there is this apprehension whether people are resource persons in the district or in a village or even in a panchayat, things like that. Okay, they are not employees as such as of now. So this apprehension that either you give them a fixed term contracts, fixed term employment, which actually increases the financial burden. Is there any way how to hire them without actually getting into an employer-employee relationship? I think
So,
that would be a concern for most of the nonprofits.
yes. Now, one is that uh, can you take them out of the normal employment employee relationship by getting them into the apprentices category? That's one category. The second category is because the apprentices would not be, like many bigger organizations have a huge lot of apprentices before they take some of them as employees. And you know which organizations I'm referring to. Now, I want to tell you, Neeraj, that the ability of organizations to engage without treating manpower as employees, that freedom is getting increasingly restricted. So if you were to ask me a question as to and therefore the question of employee classification, manpower classification, fixed term and regular, understood. Contract employment, understood. But what happens to the major category of employees which are until now being treated on some kind of a contract? Now, in core activity, the contract engagement is prohibited. So this is something that is very clear. Unless we have some shelter in those three exceptions, then of course we can still continue with core. Now, the two areas that are there is some kind of fixed term employment which will have incremental cost, because then you'll have to match apple to apple. And the second one is a thing that people have been thinking of in terms of engaging them as trainees. Okay, but again, then there you will have you will end up with paying them stipend, which is not in any way a wage, basically. And then at the end, you will have to also justify why the training, what the training, and what happened to the training. But you have development apprentices categories, which are huge number of people who are engaged as apprentices to be then finally taken as employees in the field. I do not have a ready answer to your question on the huge number of people working in the field who have been given some kind of contract, which is a one pager, two pager, which is in the nature of a contract, and we treat them under 194C as a contractor. Now, the OSH code under the contract labor section, or the merging of the CLRA into the contract labor chapter is clearly saying no, no for that. So, and the government's intention is to have only two category of employees: one, regular, without a term, and second is everybody who is not without a term, because there is an activity for which a certain time period is required for doing it, for which the money is available, or which the organization wants to spend the money. Let it be FTE. That is how the government is looking at all this.
Thank you. I think I get the answer. Yeah.
Udaya,
Yeah, hi. Hi, I think I'm audible.
go
Good
ahead.
evening. And it was indeed a wonderful session. In the first place, I'd like to say my thought process out that my one single query is, if we are hiring a consultant for 3 months, and if the consultant is converted into an employee, and the employee, after employee, if he resigns after 10 days, 15 days, or maybe 1 month, will the gratuity be applicable on them?
So as I said, Udaya, consultant is not an employee, and therefore he's not eligible for gratuity. That is one. Second
Mm.
is, if you have converted the consultant into a FTE, and
Mm.
the person leaves after 10 days, or even leaves before 365 days of work, then no
Mm.
gratuity is applicable.
No gratuity, right?
Correct.
Okay. And the second question is, if there is an year like the management can keep a cap at 45 also, right? It's not mandatory that only 30 has to be kept as a carry forward. 45 can also be kept as a carry forward. It depends upon the management's decision. They are ready to pay for it. When
No,
it
there
will
is
be.
another aspect to this. So there,
traditionally earned leave capping has not been there because this has been a discretion with the employer, okay, because of the fact that there was no such regulation to cap the EL. But what I'm actually saying is that now there is this OSH code which says 30 days, and
Mm.
it also says that beyond 30 days the leave can be encashed by the employee. So
And then
every employee,
the word is can be encashed. So either it can be lapsed or it can be
no,
like
it will not
must.
lapse. It will not lapse. The excess leave beyond 30 will have to be encashed by the organization. So
Will have to be.
yes, yes, every employee, you go to the annual leave section in the OSH code, it has to be encashed.
Oh,
And therefore, no employee will not say no to it. Nah, they will say, yes, we'll
that's
encash it.
that. Yes, that is why my query is because we are having like 50 in
Yeah, yeah. So as
three, four
I said,
employees are having 50. If they get a wind of it, then they say keep the 30 and give
yeah,
me
so
cash
so
for it. Again, the
both
next year
retro.
they will accrue. Again, they'll have another 15 extra. Every year they'll
So
get like,
So two things, Udaya. One is in terms of retrospective applicability of wages definition to EL, and second is the fact that where accumulations are already there, can with this new rule of cannot carry forward more than 30, what happens to the leaves that are accumulated beyond 30? Will people start asking? But
mm,
this if the OSH code says that beyond 30 the employee with the leave in earned leave will have to be encashed and paid to that employee. In fact, as we read from this OSH code, the rules have to be there. The EL that he is entitled to during the year, if it is
mm.
not is not availed, can in that same year also be encashed, is what we are also reading in and between the lines.
Oh, acha. Do not wait and clear it the service retirement or any other thing. By yearly also, you can clear it based on the present conditions on the wages
Yes,
every year. But
yes,
maintain only the 30 balance. Rest keep on
yes.
encashing every year, all the years, every consecutive years. Oh my
Every
God,
consecutive year. That's 30
that
years in
would
a
be
30 days in a year maximum. So every year it is going to be 30 only now.
yeah, that one.
Okay.
It's a huge chunk of money for the
I
organization.
again want to
So
tell you, I am sharing the three codes as such, the Gazette notification. For specific queries, first please read the specific section. Now that you have an understanding of this structuring of this particular entire presentation as well as the structuring of the codes, I think navigating them will be easier. I have tried to bring out as many issues as I could for NGOs, but when I'm bringing out the issues, are they formally crystallized? I'm saying I don't know, but be prepared is what I'm again and again saying. So you keep reading, keep looking out, keep
mm,
seeing your own structures, keep seeing what your earned leave accumulation policy was up till now. And if the 30 thing kicks in, what happens to encashment basis, number
mm,
one, basis of encashment, as well as what happens to the excess 30, or will that be allowed to be carried forward and paid on termination? But the 30 every year will be the 30 maximum that can be carried forward. Or I mean, that no more leaves will be carried forward is something that we'll have to look at. So for existing employees, again, we'll have to look at it where the maximum is more than 30. Okay, as per the HR policy. So all those things you'll have to work and see. Actually, I am only bringing them on the table for you to start looking at it.
okay, okay, got it. And the query on the 50 days LOPS or the absence, please clarify whenever when you get an idea about it, which you have already told me during the session.
I think, Udaya,
How
the
to
question is the question of leave without pay and absence from duty are two different things. So this question is leave without pay, which will not be the basis for 50%, not more than 50% deduction in wages. But I'll come back to you. Don't worry.
okay, okay. Thank you. Thanks a lot.
Rakesh from Sneha. Go ahead.
Uh, Good afternoon, sir.
Good afternoon.
We have regular employees who are working for 160 hours, that is 8 hours into 20 days per month. If they are part-time consultant like doctors, nurses, clinical psychologists, etc., contracted for less than 160 hours a month for a fixed term, will they be covered as a under consultant under section 194J, or will be termed as a fixed term employment?
No, if you are considering them as consultants, as a consultant agreement, then they are consultant. Okay.
Yeah.
If you are so if you are saying that you as a doctor will be working for us for 6 months, okay,
Hmm.
then it will come in the category of fixed term employment. So my suggestion is that you do not specify, but you say that we will engage you as consultant on a need basis for up to these many days. But then you do not these many hours of work as and when the work is required, because the kind of work that SNEA does is essentially kind of MCH work, and therefore you will engage doctors based on the need of having to do training or having to do that. So the contract for consultancy should not have a specified period of time. Otherwise, you will fall into FTE. Otherwise, other than that, it will be a consultant contract. And for doctors, a consulting contract should be plausible. It will not look like a employment, because doctors as a community will rather work as consultants than as full-time employees. That is what I will say.
Thank you, sir. Thanks a lot. That was useful.
So institutions which are into MCH, RCH, or any other kind of service delivery for medical in medical areas, definitely I think I would suggest that the consultant contract should be some kind of a contract where on SOS basis or on need basis is where you say, and then you fix the remuneration of that person and cover it under 194J. But do not specify the period for which you will engage them as consultant, otherwise they will become a fixed term employment. And then it gets into the employer the parity with the permanent employees. Again, it's very difficult to have parity with permanent employees, because a consultant doctor's parity with permanent employees, where generally permanent doctors as permanent employees are not engaged. Okay, so all those things have to be considered. All right, George.
Hi, Sharat.
Hi.
Sorry, just last question. So, like you clearly mentioned, see, when we engage doctors, we just mention how many hours we want to engage them, right? Because they are technical experts for us in the sector. But even in that case, somewhere when we issue the letter, we have to tell them, ki, okay, we are going to engage as per the needs, but then there will be some start month and end month, right? That can be mentioned in the letter, right?
So that is the only problem, George. Now, with the new concept of fixed term employment, the period
Uh,
of engagement is something which is most dicey. Okay, as Jaswant has also mentioned, the interpretation or the optics of it is very important, George. Okay, George, you must understand that if the optics is that there is a start date and an end date for an engagement, okay, then that particular thing will smell more like a fixed term employment. Okay, rather than being a pure consulting arrangement. So my suggestion will be, if we were to keep a consulting doctor consulting contract as distinct from a fixed term employment contract, specify the services that they will render on a need basis, and that is how it actually happens. You ring them up and say, well, we need to do this camp or a training session or or a whatever XYZ. But I would then say that do not specify an beginning and an end date now with the new concept of FT.
Okay, okay, but I mean, from their point of view, as a doctor, they will say, "Ki, we need some kind of confirmation, right?" Because then for them, they will also say, "No, okay, if you tell me to end, then I will kind of look for something else, right?" As a human tendency, boss, तुम मुझे बताओ कब तक करना है ये? That's the question they will ask. So
So,
that's why I asked you
George,
that.
let me tell you, I do not know. Most doctors work as consultants with not-for-profits, but they also do certain other things. Okay, so my suggestion is look at the termination clause, look at the clause where you can provide some kind of a buffer to be able to give comfort to the consultant rather than have a date.
Okay, okay. Thanks, Sharat.
This is, George, not because of the fact that we don't have consulting contracts with dates there, but this is primarily because of the new concept of FTE. And I'm again
Right.
telling you, the government is very clear in terms of employee classification being either permanent or FTE. That is what is the big thing. This capping on the consultant is never recognized as a form of engagement, as an HR, as a manpower as such, because consultant is very specific, but it is being misused, or used or misused, whichever way. And the contract word work is something that they have also tried to plug through the prohibition on contract labor. So what I'm trying to say is that the collapsing of the so-called sep- hundreds of ways of justifying engagement outside of traditional employment ability is something that is getting challenged.
Yeah. Right. Just a last tricky question, Sharad. What is there any limit on retrenchment or layoffs?
Yes, there is a limit on retrenchment of layoffs, but it is covered under the IR code. Okay, so that retrenchment or layoff is not applicable to not-for-profits.
Achha, so that limit is not there for us. Okay.
Yeah, so there is a retrenchment of 15 days wages has to be paid, but that retrenchment provision in the IR code, and then once you have retrenched people, you have to contribute 15% of the yearly this thing to the reskilling fund. All those provisions are not applicable. So retrenchment, as such, retrenchment may is not as the word retrenchment is not applicable. You might give an ex gratia or something that is out of your own, that is outside as a discretionary, but definitely not within the purview of the word retrenchment compensation.
Okay. Okay. Thank
All
you, sir.
right, I think we are out of time by 30 minutes. I have all my gratitude and thanks to everybody who has joined. It's been a very vibrant 2 sessions. This is the first batch, and I think there is a lot of more questions than I probably can answer, and I am confessing it before you. So I work for other organization in terms of bigger organizations, seeing their specific requirement given their present status, and then advising them is something which is specific to an organization. But generically, what I have been able to answer is something that I could, to the best of my ability. However, don't go by only the generic version. See your numbers, see your composition, see how what you have done, see your resources, see your manpower that you will be able to attribute, uh, and of course, make the changes only when you are fairly sure that the changes are now applicable. Thank you very much, and wonderful 2 days with you. We'll send this thing, and if still there are any questions, these two presentations as recording on the cloud, okay, are available until the 15th. So anybody who wants to use them can download them, but after 15th they'll disappear. The PPT and the recording I'll share by the end of day. Thank you for these 2 days, and I hope we have been able to kind of in a more structured fashion rather than so the one question that somebody from FES asked me is, how are you different from every day there are labor codes? So I think you would understand how different these 2 sessions were from the normal sessions that happen where the NGOs are not able to gather anything, really speaking. But have I answered all your questions? The answer is no. Okay. Have I answered Neeraj's question in terms of, ये contract वाले पूरा mass को कैसे हम address करें? I think we'll have to look more, drill down more and understand. Then we work with bigger organizations to kind of do that. But again, give them indication, not give them clarity in terms of ye X bilkul sahi hai. But that is something that needs to be done with the kind of fuel that we have provided to you, all specifically for not-for-profits. Thank you very much. And I hope these sessions help you to navigate all the challenges on labor, which is a major transformation, as I can tell you. Especially uh, compliance will no longer be an exception. Compliance will be the rule, and non-compliance will become very difficult for organizations. It'll be something like the 12 AB rejection ho gaya, and you really don't know what to do. Okay, so that's where it is coming to. So NGO is business with lot of challenges. NGO is business but with lots of challenges that business organizations encompass. So it's no longer a straight game, it's no longer a cakewalk. Now it's all integrated and very, very difficult unless you understand the nuts and bolts. Thank you very much. And I say a goodbye to you for these two sessions and hope we can meet again sometime. Thank you very much.